Singapore shares recovered today after tumbling to their worst performance in more than 11 years just 24 hours ago. The Straits Times Index has gained 5.8% to close at 2,362 points. Despite the economic fallout from COVID-19, experts say the stock market may get a boost, particularly after a second stimulus package is unveiled on Thursday. Brandon Tenoto with more.
The gloomy sky sums up how the stock market has performed in the first 3 months of 2020. Year to date, the Straits Times Index fell by more than 20%. In the same period, all 30 companies which make up the index are down by between 3 and nearly 50%. Transport-related stocks like Singapore Airlines and ComfortDelGro and tourism-linked ones like Genting Singapore dropped by more than 30%. Banking counters DBS, UOB and OCBC lost more than 20%. Experts say sell-offs have persisted because investors continue to liquidate assets, preferring to hold cash.
In the very short term, very near term, defensives may still be the way to go. These are the likes of healthcare, for example, utilities, real estate, and of course some of the consumer staple stocks, things that you would have to, still consume and demand even during times of, perhaps economic downturns.
Experts warn the market sell-off could continue as COVID-19 cases rise globally. They add that the Singapore market is also influenced by such external risks, but it's not all doom and gloom. They believe a rebound is on the cards. Despite the downsides, bright spots still remain, and this comes in the form of the $4 billion relief package announced in the budget, which includes measures like rental waivers and salary support to help firms. Plus, a second stimulus package is also in the works. Now, that package aims to help workers keep their jobs and support those who've been retrenched. Experts say this added stimulus could help Singapore avoid a situation where lower credit levels may lead to lower consumption and a slowing of the economy.
When that happens, banks will be reluctant to lend, and investors are not willing to lend money as well. So the flow in the credit market stops. Business will struggle to have their cash flow. If that's really happening, we will see defaults and we will see bankruptcy, and that's when the real trouble comes. We are seeing that global central banks are committing to more stimulus measures, and they will perhaps do whatever it takes to show up growth and prevent a massive unemployment trend.
Market watchers expect the STI to top out at 2,500 points, at least until the end of March.
And for more on this, let's speak with Nirgunan Tiruchelvam, Managing Director of Equity Research at Exotix Capital. Thank you very much for joining us. So let's look at the STI. It jumped as much as 5.7% today. Why is that so? Is that because of the US Central Bank's announcement overnight?
That is certainly a major factor in the whole exercise. But the important thing to note, Glenda, is that this is a global phenomenon which is unprecedented in its scale and the extent to which it's affecting the lives of virtually every citizen in the developed and emerging markets. So the situation in Singapore needs to be put in that context, where Singapore has won plaudits for the manner in which it has handled this whole exercise. However, we are not still out of the woods in this country and in a number of countries.
So how long then do you think that this rebound will last? Is this an opportunity for investors, or is the market still too volatile?
Let's look at the medium to long-term situation. Investors will look at counters that are deeply undervalued. Certainly the real estate sector looks attractive from a long to medium-term perspective. Investors will also look at defensive opportunities in the consumer staples field, in the utilities field. And it's with that spirit that people will be bargain hunting at these levels. It's very difficult to say whether the worst is over, because we still need to figure out whether the stimulus package is going to be put in place. But right now, as we speak, the chances seem to be escalating that that would be the case. The other green shoot that you need to focus on is the return to normalcy in China, especially the Wuhan lockdown coming to an end. That may be viewed by the market as a very positive development.
All right, companies that are undervalued, we also saw the Singapore Airlines stock rebound despite its announcement of cost-cutting measures. Is that the case? Is that what's happening right now to Singapore Airlines?
Cost-cutting is going to be the case across a number of industries, in the consumer space, in the airline space. These are businesses which are under tremendous cash flow pressure. So it's no surprise that these institutions, SIA in particular, are engaging in that. The question is, are they sustainable once these cost-cutting measures are in place? That's the question investors will be focusing on. What is the cash flow situation post the cost-cutting measures?
You mentioned the second stimulus package here in Singapore. We are expecting to see that be revealed on Thursday. What do you think that's going to do to the markets?
That would renew some confidence in the market. One important factor in Singapore is the high level of trust that the citizens have in the government, and the government seems to be taking a very mature, measured and professional approach to the whole exercise.
Well, we're also seeing a lot of QE. These are qualitative easing. So what are the implications here then?
Quantitative easing, I should say, is an important factor to restore the confidence of the market in the equity markets. So we see QE being aggressively followed in a number of Western countries, and that would be welcomed by the investors, as that is the only recourse in such a fraught and dangerous situation.
All right, thank you so much for your perspective, Nirgunan. That was Nirgunan Tiruchelvam from Exotix Capital.